Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. The second report this week we have prepared on the gold market as usual. As usual, we also have taken a look at the fundamental background, what's going on right now, and it seems that indeed the retracement that we have mentioned in our reports within the last month, so every week actually, we talked that retracement is coming closer because market starts flirting with the major monthly targets, and right now it stands at strong monthly resistance, so it includes monthly overbought area, major fib resistance, important target. So it's just a really tough task to pass this level without any respect, and that is possible only on some absolutely outstanding fundamental reasons. So chances for that are not really significant, and that actually increases the probabilities of the moderate retracement on a monthly chart. So it could be moderate maybe on the monthly, but on a daily chart it could be long-term retracement. So it's really significant targets could be achieved with this pullback. So in today, in this report, we have discussed the levels, the possible targets of this retracement. So all this stuff stands on the weekly chart. On the daily chart, we will take a look only on the nearest perspective, what we could get on the common week and targets that could be achieved, and what levels to watch for to understand what's going on. Towards speaking on the fundamental background, so the major driving factor for the gold is statistics on the United States economy, so because it makes direct impact on the Fed policy, and second, United States-China tariffs. So if it's relatively clear what's going on with the United States statistics, so it shows really good performance of U.S. economy. Speaking on the China tariffs, it's not quite obvious situation, because our suggestion is market is overvalued the impact of the tariffs on the United States economy, and this was really too long expectation when final the tariffs will make its negative impact on the United States economy. So it's more than a year already has passed, but nobody see this negative impact. So as economy shows the good pace, it continues to show the good pace. But we can't say the same things on the China. And today we dig this topic a bit deeper on the fundamental report, and you could see that on the China economy, it really has some problems, even big shifts as results of the tariffs that have been imposed by the United States. That confirms our opinion that we have announced even half a year ago when the hot stage of the tariff spiking starts. We said, guys, the tariffs is the tool in the hands of the United States. This tool serves only to its master, despite that China also has made an attempt to impose the mutual tariffs on the United States, but that is really like the cake for elephants, so this is not lead to any significant impact on the market. And our suggestion is that United States slowly but stubbornly would get the aim and the target that it aims to. So it's with the pressure on the China economy, they will get what they would like to. And I think that's a big shift could be. But for us, is more important right now is reassessment of the value of this driving factor. And it seems that markets gradually come to the same conclusion that this driving factor is a bit overvalued. We need to adjust the perspective, the view of this driving factor for more hesitant result. So it probably will lead to the more hesitant gold growth, and that's as we hope markets come to. So we understand that long time ago, but markets gradually also starts to suspect that something is wrong with this treating of this factor as a very strong and major driving factor that would support gold for a long, long time. In reality, this is looks different. That's shortly what we discussed in weekly report on the fundamental background. Now let's turn to the technical. On the technical side, we have our head and shoulders pattern that we have discussed last week as well. It looks a bit choppy, not perfect, but still we have what we have. Actually, we are mostly interested right now with this ABCD pattern. On Friday, this was some kind of the test for the gold market. If you remember, we said that if market will turn down from one of the resistance on intraday chart, it means that top stands in place. Market is ready to go lower. If market will take it out of this top, it means that we will get some different action. And this top of the C point is still should be treated as the major invalidation point. We'll still keep it on the chart because that's one of the points that were interesting with it. So until market stands below the C, the downward trading plan stands valid. So we are currently focused on this trading plan. But once market will climb above C point, everything could change. Long-term retracement will not be cancelled, but it will take the different shape. But currently we are focused on this ABCD pattern. So take a look at the first target of this downward action will be the OP around 1450. It creates an agreement with the 1460 area, but also if you'll take a look at the weekly chart, you will see that 1447 is a major 30% support, and also this will be the weekly oversold area. So that will be our sale for a common week. So if market will start dropping, it probably will be next week will be finished somewhere in this area. Hardly market will break it significantly to the downside on a common week, despite the Fed decision. So on the 4-hour time frame chart, the manner how market could reach it actually stands the same. We already talked about the possible butterfly. Actually, when the market turns down from the 30% resistance on intraday charts that we have specified and confirmed this bearish engulfing pattern, it just confirms the possible appearing of the butterfly and downward breakout. So now we need to keep an eye on these lows, 1485. They should be broken. That will be the confirmation that market indeed is coming to 1450. This is crucial because, guys, this is actually the neckline of our head and shoulders pattern. Market has to broken it down to trigger the major action based on the head and shoulders. You can see that butterfly target stands very close to OP of our major ABCD pattern. So this is 1451.60. That is 1460. So $10 difference here. But for example, if market will reach this area around the Wednesday when the Fed will start its meeting, it could be significant volatility around and both targets could be reached. So these two patterns that we're watching for. It means that currently, while market stands below this top, 1525, we could consider the taking of the short positions. But as major retracement already has happened, so you can see actually right arm already stands in place. Here is also pullback has happened. Here, as market is already forming the butterfly and tends to showing the breakout, pullback probably will be small. And for that purpose, we need to consider just two levels. The first level is 1495, is first fib resistance, and second the 15 even. This is confluence resistance. It's accompanied with the weekly pivot point. So that's two levels that probably will hold any pullback here on Monday of the market. So I will not be surprised if market will break it immediately on the Monday. It's also possible because current market stands not that oversold. But if we'll get lucky and market indeed will show the pullback, keep an eye on these two levels. It's probably retracement will be over somewhere around them. So that's our view on the gold market. Market's forming pretty nice patterns. They are really clear, very harmonic. If you will take a look at the charts from the monthly down to the intraday charts, you'll see it's very harmonic price action stance. Well, and it's really worth of our attention. We will get really interesting setups that will be interesting to watch for.